when we start the recording for the live, I've already talked for 1 to 2 minutes, excuse me, and we kind of missed that whole gap. So hopefully we timed that right. Hope y'all had a wonderful trading week. As you can see with the news that just came out, everything has been just absolutely wonk. I'm going to dive right into the charts, and I'll show you what I'm talking about. Let's go here. All right, so now I did not say anything about this trade on the live. Thankfully, I didn't, because USD CAD's been almost identical mirroring gold. As you can see, we had this massive consolidation, price just moving sideways, back and forth, and I believe you're not going to be able to see this, but let me flop over to the Forex Factory real quick. Yeah, so we just had the CPI news. We had the core CPI, everything come out. Looks like it was actually better than expected. I'm not sure, I can't see that quite yet, but let me back to this, and now you can see obviously US dollar gained some strength. Literally knocked me out, but that's all right. I'm going to just flop to the higher time frame. You see where I was aiming, and it still could. Remember, most of the time when price reacts like this on these zones, it's either going to retest or it's going to hit the heart line. And if you're new and you haven't been watching how I trade, the heart line is just the middle of my zones. So price could do this right here. Price could come up, it respected this area, and then, oh, I'm sorry. All right, trading view. Anyways, I apologize. Price just does this and then comes back down, plays around, and then hits our zone. So that's the potential, but this is the reality of trading. We have wins, we have losses, we just move on. The beauty of it is I'm not in this trade, so I can just sit here and look back and say, or just watch current price and say, okay, well, let's see what it does. If it hits here, I can put my little sell limit and say, all right, I'm just going to do, since it's Thursday, market closes tomorrow, just do a quick little, maybe a 4 to 8 hour trade and be done with it, or catch my entry off this. This is for intraday. Now, like I said, as a swing trader, I do not like to take entries off the heart line. Now, if price comes all the way up to here, I would be looking for price to either do like some sideways, some consolidation, some type of clear indication for me that price is respecting this zone and we're going to retrace back and we're going to continue to the downtrend. But as I say, continue to the downtrend, let's look at the higher time frame on USD CAD real quick. USD CAD is in a pretty bullish run right now. We have this massive run from 1.33 all the way to 1.37. So we're pretty bullish right now. So realistically, I was kind of counter trend trading, and that's my fault. But what I was looking for is I seen this huge area, and you can see, let's just drag this all the way over here. Excuse me. My voice is always perfect until I get on here, and then I think just because I'm talking to myself, my voice always wants to go crazy. But this is what I was looking for. I just seen multiple touches, and I was looking for price to at least come back down, retest this little area right here. Again, y'all know I'm not too great with this tool here, but I wanted to see something along this line be touched, and it still can. Remember, it's early. It's only 10:05, so news just come out. We have the initial reaction, and then the impulse could be USD CAD just absolutely blast down. We'll go to the smaller time frame again, and you'll see exactly what I'm talking about. How normally this is how news reacts, whether it's bullish or bearish. However it reacts for that currency pair, 9 times out of 10, the first initial movement is just a reaction. People, like the gamblers jumping in, they just want to boom. They want to get in. They feel like it's going to be a massive sell. News is going to be horrible. But no, that's the part about like fundamentals. Nobody knows how the news is going to play out unless you got some type of insider trading, which is not going to be. You're not going to be a retail trader. But that's the initial reaction, boom, and then you got the impulse, how everything just comes together, and then you'll have the final move. of how the fundamentals play out, how the news plays out, how if it's CPI, FOMC, NFP, stuff like that, any type of speech like Powell speech, stuff like that. You're going to have the first initial reaction, like the instinct, and then the impulse move. So it's best if you enjoy trading, because I used to love trading news. It's fun. It's kind of like exciting, especially if you're doing it intraday or scalping, because that's how I realistically, when I first started, not necessarily first started trading, but where my first big success came from. And this is not like, don't follow this. This is just what worked for me. It was gambling, but I used to trade NFP and FOMC. NFP used to, like in 2018, 2019, even 2020, when that news come out, gold, UJ, Euro USD, they would move 200, 300 pips in seconds. Literally, the news come out and gold would skyrocket. You could take a $5,000 account and make 70 to 100 grand, even on a smaller lot size, just because it would just blast off. You only had seconds to execute, but and then this is where the problem started coming in, where a lot of the shady brokers would slip and manipulate pricing and everything like that. And by the way, if you can see me, I was working out yesterday and hit myself with a 45-pound plate, so my eyes are almost blacked, and I got this massive gash in my nose. So I don't know why I thought of it. I can see it. I can still see it. So that's why I thought about that. But anyways, so as I was literally saying, you see how price goes. This is why, for me, I don't necessarily trade fundamentals, but at the same time, it's always good to at least check back and forth and make sure, because especially when you see price moving at a certain level and it's just going sideways, and the same thing with gold. Let me just do this on gold real quick. Remember how gold was moving sideways? And we'll talk about this trade right here, but gold was doing the same thing right here. And then once I seen that massive boom, I knew that price was on the smaller time frame right here. I'm just going to do this. Smaller time frame, price was moving sideways and just giving me a better window and a better story of what was going on. Like, I seen all this happening, looked like price was holding pretty steady on this, and then I seen this where it looked like price was about to just die off and dump, and then it stopped. Even I could go to the 5 or 1 minute, but I don't want to lose price. It was just steadily just sitting at a constant area around like 1810, 18, maybe 1811, and that's why I was like, oh, I'm gonna take my entry. I actually took my entry about right here. Once price respected, come back down, and then I seen price moving back up, I took my entry. But if you're looking for like the sniper entries, remember, my strategy for swing trading is the break, hook, and go. That is the best, easiest, clearest indication for an entry. And you can see price tested and then broke here. I don't know let me see if I can zoom in, because I didn't have that locked. That's right. Let me just remove this. So price broke through this little area right here at 1822, basically 1823. We'll just say that. Price broke through, retested, and then shot off. Break, hook, and go. And that goes for either or, whether you're looking for a buy or sell. 9 times out of 10, the market's gonna test your patience right here, wipe out, gain all that, what you guys like to say, like the liquidity grab. This is that. Like, you're talking millions upon millions of money gapped and lost and everything, accounts blown, everything through this right here. And then the big boys come in and boom, start driving price. Break, hook, and go. Easiest strategy ever. And I'm going to go again, every live, I'll go over my strategy. I just want to go over what I was talking about with these. All right. So let me go to the higher time frame and fix this real quick, because I actually called that in my analysis room. But all right. So on Tuesday, price was like right here. And I was talking about waiting on the heart line to basically do, if I was going to scale in, entry was here, scaling in here, and what was I looking for? Same exact thing, break, hook, and go, even though I know it's on the heart line. Now, when you're scaling in, like if I'm in an entry at 18.18 and price is at 18.55, that means my initial entry is up close to 300 pips. So if I'm up at a one lot, and then I'm looking to scale in, and realistically, I scale in way before a 300 pip move. I could show y'all, but I think I closed out almost half my position on that. But when I'm looking to scale in, I'm going to lower my positioning, because if I'm at one lot and I drop a 5 lot or a 2 lot, and then price retraces that leverage on that trade, that drawdown is going to wipe all of my profits out. And then 9 times out of 10, because I'm a human just like everybody else, your emotions are going to say, oh, I need to close this trade. Or the worst of the worst, you add another entry to a losing position. Even though I've got this position that's winning, my second entry is a loss, and then I'm going to add another entry thinking you're getting a better price. That does not exist, and that is detrimental. If you guys seen my reel on Instagram, I actually breached my account, my funded account, because I put in, and I even lowered my position, but I actually I had 6 positions on GJ. At around 184, I think, or 183. Price was down to 180 something, and then I added another position because I was gambling. Even, I'll talk the big talk, but I do the same thing. That's why I stress to you guys, like, it's very easy to do, because we all want more money. The greed comes and sucks us in, and it's the same thing. Like, the consistency of the market going against you. It's I don't know why it works like that, but it tries to teach us a lesson. We just don't learn from it. So yeah. But anyways, I wiped my account because I over leveraged, and exactly what I'm telling you is exactly what happened. That drawdown, that my second entries, even though I was up close to, collectively on all my entries, I was up almost 1,000 pips. But my 2 scaling entries wiped all that out and breached my daily loss limit. So again, when you're at a position and you're looking to scale in, always lower that position to where no matter how far, even if your second entry goes all the way to your original position, it's not gonna wipe your account. 2, it's not gonna wipe your profits that you're in from your original entry. So easy math. If you're in a 1 lot or a 0.5 in your original entry, you're up 80 pips and you want to scale in, lower at least half of that position to where if it goes all the way back to entry, you still are at least a break even. So there is that. Now on Tuesday, I don't know what's going on there. Tuesday again, price was, I believe, right here, or it might have been even there, and we were looking for the retest of entry. I'm going to do my little marker here for the break, hook, and go. Beautiful, simple strategy. Broke the heart line, retested, and gone. And that's 1854 to 1876. So majority of you guys, because I follow the Discord, I watch y'all's trades. This is what you guys do. Instead of looking for these long swings, you guys are looking for these real quick moves, and you put 40 entries on there, and you max your leverage to where you're looking for like a 10 to 8 or maybe even a 15 max stop loss. That's insanity. You're not a world-class trader. Like, if you think you're going to gain consistency and success with having 10 to 15 pip stop losses, you might as well stop now, especially if you're using any prop firm, Surge, anybody, doesn't matter. You're going to lose. I promise you. You want to be able to have a stop. The whole reason for the stop loss, 1, to protect your capital. 2, to allow price to move, and you are able to catch that move, whatever it is, whether it's bullish or bearish. Excuse me. Your stop loss is to just give the pair, because price goes up and down. It's like the ocean, and it's never a constant. Now you do have you know, where price will move sideways, this and other, but it's never just a constant thing. Like it's up and down, left and right, sideways, whatever it is. Your stop loss gives you the ability for where your position can take price's ability to breathe. Like it's sitting there flowing, it's up and down, you're in a little bit of drawdown, you're not. That's the whole reason of having a stop loss. And let me just go to USD CAD real quick and I'll show you what I mean. Even though this price was a loss, there was multiple times this trade was in profit, maybe just a little bit. I think it was maybe like 10 to 15 pips because I think our entry was actually somewhere around here. But this is 9 times out of 10, this is how trading works. You got price to go into profit and back into drawdown, back into profit, back into drawdown, and then the move finally takes off. That's what you want for a stop loss. Now, for you guys that are doing this, and this is what you're looking for a let's just say 36.05. So basically like 11 pip stop. Look how many times you would be looking for that entry. Like, okay, this is it. This is the sell. Boom, you get stopped out. All right, no, this is the sell. Boom, stopped out. All right, this is definitely the sell right here. I'm showing. I look at these massive wicks. Everything's. The stars are aligning. Boom, you get stopped out again. That's why I always use at least a 40 pip stop. It just gives you enough room to where you don't have to sit there and panic if price is going back and forth. And you already have that mindset where, okay, if I'm going to take this loss, it's all right. I already use at least 1 to 5, 1 to 6 risk to reward. So I'm okay if I take this loss. Every loss hurts. It doesn't matter. Even me, I still get upset. I'm like, what's going on? But it's all right. We're going to have losses. That's how it works. You just got to remember, we trade for the next day. You don't completely risk your whole entire account on one trade because nobody knows, regardless if you use every single indicator in the world, you can be wrong. We're all wrong all the time. Excuse me. All right. So USD CAD, still waiting. Like I said, possible entry around the heart line. I like to look for an intraday. I want to see at least a touch on the heart line. So price could be playing around here. What I'd like to see is basically price could do this right here. Come up, come down, play around, and then it'll come up to like right here, and then boom, at least down to there. And that's 1.36700 to 1.35. So basically 170 pips. This move could be finished today. So I'll put this. Now, where that stop loss comes into play, 1.365. So you're talking 20 pips inside this little heartline area. So if you were going to put your entry and you didn't have time, like if you're working and you don't have time to sit there and just wait for that entry, you could put a sell in it right here. You have your 40 pip stop, 36, so it'd be 37. And look, you have all this room for price to play around, even come up to the peak, almost hit your stop. But that's the whole point, because price can do this right here. I see this exact formation right here. Price almost does like a little mountain peak or like almost like a rainbow thing, and then come like that. And that's all that is like what you guys always like to call like the liquidity grab. That's how the market moves. That's how the algorithm is set up to create the movement of the price. And that's what I'm trying to signify here is just that's what the stop loss is for. 40 pip stop, it's just there's nothing significant behind it. It just, for me, 40 pips is enough to where I can lose a certain amount of trades, almost 5 trades, and one trade wipe out all the losses. And again, like I put a story on my Instagram about these lives. I know you guys are working. I know a lot of y'all don't have time, especially at 10 a.m. But remember, all of these are recorded on Surge Traders YouTube. So just go there, watch the video, leave comments, leave a like, whatever you want to do. It doesn't matter. But I do appreciate the comments because for me, all I care about is consistency. I want to get on here and show you guys exactly what I do on a day-to-day basis that has created the success for me. It's It doesn't change. It's adaptable to every way the market works because it's a simple strategy. And it is 10:20. I'm going to go over that right now, and then we can end this live. So let me go to gold just because gold is my beautiful baby. All right. So first thing, oh, and by the way, you see this trade. This was, I showed y'all this, I think last week and Tuesday. 1818 to 1930. Count those pips. That right there, life-changing trade. That's why I enjoy swing trading, because every trade, depending on your capital size, like if you got a $250,000 surge trader account or $1 million, this right here, complete life-changing. All right, so let me just do this. Remove drawings. Let me take a drink because I'm going to be talking a lot. All right. First thing I do, top-down analysis. I go to the monthly. Scale down. Current price. Remember, I know a lot of you guys, if you are watching and you've watched every live and you're like, oh my God, he goes over the same thing. You're right. Consistency. That's what I love. First thing, higher time frame, go to my candles. I go to my line chart and I look for peaks and valleys based off current price action. I don't care about all the way down here in 2008 unless it's at current price action. So if price was right here and current price is right there, then that's what I want to mark up. But so I just grab my little line. I'm going to do a peak here. You notice I just put it at the peak. I didn't care. I'm not looking for wicks, bodies, none of that stuff. I'm just looking for current price action. And do not, like, see, I almost, just human instinct, I wanted to sit here and do this right there. Doesn't matter. You're going to see why it doesn't matter. I'm going to put one here. Maybe one there. What I'm looking for is multiple touches on those peaks and valleys. I'm going to put one there. And that's it. That's good for the monthly. It's almost too much. As always, remember, you can right-click these, change the colors. You can put a text form and put that this is your monthly zone. You can put whatever you want on there to remind yourself, all right, this is a pretty significant area. This has been touched 7 different times on the monthly. I just like clean and clutter-free, 0 indicators. The moving averages on my screen now, I just like the way they look. I like to keep people a little stumped on how my strategy is, but realistically, they do nothing, because a lot of people always say, oh, I wait for my moving averages to cross. I wait for price to hit on the Fibonacci level of 31.6, and I look for my divergence and all that stuff. Absolutely sounds beautiful, and it sounds so much more significant or extravagant than my strategy, because my strategy is super simple. But you're telling a story of what happened back in history, because as you can see, current price action, these moving averages are nowhere near each other. This moving average is at 1755. This one is at 1850. So nobody knows if these moving averages are going to cross. Nobody knows if price is going to come back and retest this area. Nobody knows nothing about that. What we can say is, oh, so I waited for the MAs to cross. This level right here was 31.6. I was waiting for price to coagulate, or whatever the absolutely ridiculous words you guys use trying to explain Forex. Stop doing it. Simple, and find a strategy that works. All right, higher time frame, peaks and valleys. Let's go to the weekly. Find anywhere else towards current price action, maybe right here. Again, you don't want to clutter it up. This is almost too much right now, but we'll do this. And also, higher time frames, this is where you find your trend. So we automatically see, just based off this little leg, gold is, and I'm going to use this as a trend line as well, but we see gold is in an uptrend. Higher time frame, massive uptrend. You see gold came from all the way up here. Now it's just kind of moving sideways during the higher time frames, and this is based off from 2020. So from 2020 to now, price has kind of just been playing that area. Whatever this zone is right here, massive, could be like this bartering price between the worlds, whatever it is, but gold is playing in that zone. So we have our weekly, we have our monthly. Let's go down to daily and see if prices any. Nope, I see maybe just to make things look a little more aesthetic right there. And then all the way down to the 4 hour. And again, this is just off the line chart. I could have, if I wasn't talking, I could have had this marked up in 2 minutes and been done, knowing exactly where I'm looking for price to go. And that's how simple it is. We have everything looks good all the way down to the 1 hour. All right. Again, I like clean and clutter free. Do not over, because I could put a line here, 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 and all that stuff. Don't do that. Don't do that. Leave yourself a little bit of an area for like the heart lines. I haven't explained that yet, but so the heart line is always, it's like a little heart monitor thing, back and forth, back and forth. It's where for a swing trader, you're not looking for entries, but scalpers and intraday where you could potentially find entries, because it's 9 times out of 10 on current price action, like throughout the day, especially around 10 a.m. to 2 p.m. price is going to be in these areas, because you have New York open and then all the way into London session. So you'll have these type of entries. So the heart line, just the center of these zones. Super simple. And again, you can change these colors to whatever you want. This just, it's easy on the eyes for me. Let's do that. That way we can see how price moves later on, and maybe in the next month or whatever. And then let's put one on current price action here. And boom. All right, now that's enough. 1 hour's almost realistically too low of time frame. Now I'm going to switch back to candles. Now again, you guys seen I didn't spend any time looking for wicks of bodies, none of that mess. I just done peaks and valleys. Didn't care how close I was, even on this little trend line. You seen I just boom, I put where price touched on the monthly, and now look how it respects these areas. So let me zoom in and show you why I don't spend so much time looking for wicks and bodies and all that craziness. Look at this. You see how price plays? You see all these wicks where price was giving you clear indication. Price come up, retested, all this. I didn't look for anything crazy. I literally just said, okay, here, 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 and here. And boom, it's done. Now, let's go to current price action. And let's talk about where these trades came from. Remember, we literally were just talking about this. Where price was. We were looking for that nice little pullback. Well, there it is. Literally live for y'all. All right, so we were in a buy. Let's just say here in this area, 1950. I'm going to go to the higher time frame real quick. Why 1950? I'm looking for a retest of the previous zones. Yeah, 1950 right there. Previous highs, whatever you want to call it. I just call it zones, highs or lows, whatever works for you, doesn't matter. I look for price. Price respected this little bullish trend line, which was also that area, y'all see me put. Kind of respect this area. Came down, built some liquidity up, trapped huge sellers, and then boom, buyer orders took over. Now we're looking for that nice little retracement, what we were talking about, into the next zone. So what price can do now for gold? We just had the CPI news, so gave US dollar some strength. That's where the fundamentals come in. Price came up, tested this area, could either come down to this or here, and then retest the next zone, do its thing, do its little ladder thing, whatever. Nobody knows how that works. But the buys are in heavy. Let's go to the smaller time frame. Let me lock this. So for my entries, what I look for, I look for on the swing trading, you're going to have price do this at these areas. So if it's at a certain level where it's 1865, and a lot of times I do like to use quarter points, which is basically 25, 50, 75, 100, 25, 50, 75, 100. So simple math. We look for the quarter points. That's for on the quarter points on your entry. If you're looking for like prices at a certain zone, and you want to look for the quarter point, it's like 1828.500, 1828.25, 1828.750. That's just the quarter points. Doesn't always have to be. It's just something I used to use that kind of worked for me. But what I like to look for on these areas is a clear indication candle. Now, if you're looking at this, we're on the 1 hour. Can't really get a clear indication because price is all over the place. But when you go down to smaller time frame, see price constantly touching this area. Boom, boom, looking like it was setting up for a massive sell. And then we'll use this nice little window. I drew that way too big. I apologize. But these are the little clear indications. You guys can call it divergence, whatever you want to say. But I see price touched, came back up, touch, 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 came back up, touch, touch, came back up. And then if we could literally just drive that, that gives me where price is about to run up and give us either a huge impulse run, or it's going to at least break out of that area. Now, not all the time. Again, for entries off these zones, this actual zone, we talked about this earlier, like I think it's 1828, 1825, goes all the way back to like 2008. And I discussed this on previous weeks. This was when I think price was right here when we were talking about this, maybe last Tuesday. And I said 9 times out of 10, what's going to happen because it's at a significant zone, it's going to move sideways for a few days, few weeks, excuse me, and then make its initial move. Played out perfectly. We talked about entries maybe like right here or around here, and then price come through. So what I mean by the clear indication candle is you see how all this whole entire area, price is just small bits and pieces, small bits and pieces. You do have some initial pulls of a bearish momentum, but look at these bullish candles. You have this little run, pullback, this little run, pullback, massive run, pullback, and then here's your indication window. Even if you catch the trade here or here, when you see that massive clear indicator telling you that the bulls are about to just completely take over, that's your window. Now, for me, if you guys came or you're watching this, you heard me talk about the break, hook, and go. That's what I love to use. It's where if price is below the zone where I'm looking for the buys, or above the zone where I'm looking for the sells, price breaks through, hooks, and then goes. If we're looking for a buy, price breaks through, hooks, and goes. Super simple strategy. It's very easy to identify. Price breaks, hooks, and goes. And a lot of y'all could have said, well, it broke through, made a double bottom, triple bottom. You know, you can use the structures. Be careful with structures because those worked for maybe 5 years, but the market's always changing. They understand that education is all throughout the window or all throughout the world now. Sometimes because the algorithm is algorithms based off numbers, you will see structures like inverted head and shoulders, triple bottoms, double bottoms, whatever it is, but don't always look for just that. If you look for the break, hook, and go, your entry would have been right here anyways. I'm just going to do this. And all price would have done was come back to your entry and then, boom, blast it off. Price come back to the heart line as a swing trader. Well, I forgot to explain this. As a swing trader, I'm looking for at least a 2 to 3 zone move, meaning these red lines, not the heart lines, each zone. So from this entry, 1828 to 1865, you're talking close to a 330 pip gain. That's just one zone. It's just one zone. 1829 to the next zone is 1898. You're talking close to almost 700 pips. Second zone, and then your third zone, which is 1931. I put this at the heart line because that's where the previous high, that would be the retest. But you're talking almost a 40 to 1400, however much it is, gain. on one swing trade that could take, especially on gold, 3 to 4 days, 2 weeks. And I know a lot of you guys, you're like, I can't, that's impossible. I can't hold a trade that long. Experienced traders are swing traders. Novice to day-to-day traders, intraday, and beginners, scalpers. Scalpers, why do I say that? Because when you're beginning trading, you're super excited. You're ready to make some money. You're going to buy a Lambo tomorrow. And everyone tells you scalping is the quickest way to make money. That is true. Scalping is the quickest way to make money and the quickest way to blow accounts. That's why I say that's for the beginners. The beginners are always the ones with the most excitement. They're funding accounts and blowing accounts within the same hour. Don't do that. Now, as an experienced trader, you can start scalping once you create your plan. Like, again, I said, off the heart lines. You could scalp literally 1884 to 1872. We discussed this on the beginning, like literally 20 minutes ago. So that little scalp right there, you could have made 3% on your account, done for the day. That's the luxury of scalping. Swing trading, remember, 2 to 3 zones with a 40 pip stop. One little loss and then to all this gain, this one trade wipes almost 2 weeks of history. That's why I enjoy swing trading. I don't want to sit there and just keep pulling my phone up, looking at my trades, panicking, freaking out. It's not worth it. If you're a new trader, you're going to experience it anyways, and you need to experience those emotions, because once you can start understanding and creating your plan, you realize that the emotions are what it's detrimental to your trading plan every time, or to your account, whatever it is. Once you can start becoming detached, and the way you do that, because I know everyone's going through their own financial problems, you have to understand and take trading as treat it like a business. Like, okay, I'm willing to do this and put in this amount of effort. I'm willing to take this amount of loss for this amount of reward, and I'm not going to risk my entire account on one trade. Like, it's insanity to me when you guys message me and you're like, I had one loss and I breached my account. That's insanity. That's crazy. Especially if you're looking for, like, if you're doing the audition for surgery, if you've got a funded account and you let one trade breach your account. Now, again, in saying that, for me, I was in that trade on GJ with my account. I was gambling. Like, I went into it with that mindset. Like, I wasn't thinking, you know what, I'm going to keep this account for 6-7 months. No, I was aiming for a quick in and out, dump the payload, and I was up, I think, 14 grand. And then again, like I said, I over leveraged, margined it, and that's what happens. So anyways, going through the zones for swing trading, you're looking for break, hook, and go. Any indicator with one candle, that clear indication candle, you see it right here, boom. And then intraday to scalpers, you're looking for entries, and you can still, like, if price is here at these zones, you can still catch that. You can still catch that. So don't think, okay, well, I'm only looking for a little trade, I'm going to take it here. That's perfect, because you're going to look back and be like, man, I wish I had an entry there and I could have held it all. Everybody does that. I'm just saying, for the heart line, based off where current price action is, that's what you want to be looking for. So for a scalper, boom, you could take that. Intraday right here, same thing. Scalping intraday right here. These are just possible entries, potential entries of what you could have done. And I know, obviously, you're going to say, oh, it's easy to find based off current price action. This is not no, it's fine. I don't matter. This is not a trend line. This is just that little arrow I put. So this doesn't matter. These entries right here. Okay, now, current price action. Where would we take a trade if we were right here on current price action? Well, let's see. We have a zone here and we have a heart line here. This is the no trade zone. You're in between the zone where price, we have no clue what could potentially happen. Now, again, this is not a trend line right here. This is just I put this arrow here. This is what price could be doing. It's just funny that it worked like that. But current price action, you've already got your zones marked up. So you know you're only going to be taking entries here or here. You've got your trading plan. We've got our uptrend. We're going to be we're waiting on the pullback to come back to potentially here, or we wait for price to break the heart line and then we look for our entry there. We do not take trades in between these areas ever. If you're looking and searching for a trade and you can't find one, guess what you do? You get off the market. Or if you want to look for a different pair, like pick 2 to 3 pairs. If one's kind of consolidating and it's in between these zones, be patient. If like we're looking for buys, put a buy limit here. Looking for sales, we put a sell limit here. Or if we're looking for, we can put a buy, I believe it's a buy stop. I don't use these entries, so I don't want to get these wrong, but I believe it's a buy stop here where if price comes through and hits your buy stop, then it gets activated. But anyways, guys, I've been on here a while. I don't like to put these lives too long because I know y'all don't want to watch a movie with me. So I appreciate y'all's time. I hope y'all have a wonderful rest of your week. We will go over some things. Now, my guests, they had a little bit of complications, so I didn't get to have my guests on here with me. And I know I keep making failed promises to you guys, but I promise you it will be worth it. And I love y'all. I hope y'all have a wonderful day.